Good morning. It's Tuesday, September 23rd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So can this precious metals rally go on for years? We're seeing gold rocket on up to new all-time highs here, 38.2460. As of this recording, settling just a couple dollars below there. You look at the silver market, up just under 1%. That's up 36% at 46.58, about 2 cents off of that contract high. How do you play it? This is really where defined risk strategies work well. So let's check out your setup on the precious metals, U.S. equity market. So in the gold market, two interesting reads I had last night. One of them in SocGen in their latest Commodity Compass analytics. They make the case for a perpetual bull market in gold, in precious metals. Now, I know you're going to tell me that gold has been in this perpetual bull market. And yes, I've been doing trading commodities here as a licensed commodity brokers for nearly 25 years. SocGen, though, in their latest Commodities Compass, they titled this article Forever Gold. And what they're saying is China's continuing appetite for bullion could go on for years. According to the State Administration of Foreign Exchange, it's called SAFE. That's the institution for managing China's foreign exchange reserves. Their total reserves are about $8.5 trillion here. Now, China currently holds about 2,300 tons of gold. This is data as of July 2025, which at today's price level equates to roughly 8.6% of their total reserves. It puts China about 8th in global holdings in tonnage of gold, and the average percentile of all central banks, according to data recently released, is about 21.5% here. So what they're saying is if you are a foreign bank, a foreign exchange, we've seen a lot of divesting of U.S. treasuries, and we've seen a lot of divesting of U.S. dollars. And what have they been replacing that with? They've been replacing that with gold. So the average central bank around 20 on up to about 30%. China's sitting at about 8.6%. If they want to build those reserves up, this could really boost and be a tailwind, a multi-year tailwind for the gold market. There's another article that just came out on the Bloomberg terminal a few minutes ago, and what it talks about is China being a custodian to help foreign sovereign gold reserves and build strength here. What they're looking at doing here is they're looking at holding those reserves for other countries out there and being a somewhat of a partner of different countries in order to build these reserves up and help other countries out there build their own reserves in a matter. So the People's Bank of China was looking to use the Shanghai Gold Exchange to court central banks here in friendly countries to buy gold and store it within the country's borders. So they're really looking at this press here on going all in on gold, at least China's concerned from what I'm reading here. Now you look at the equity futures, they're a bit quiet here after this Monday AI excitement here that drove all the indices back up to fresh all-time highs here. So there's a lot going on. In the background, you've got this looming government shutdown. You've got surging Chinese exports. And the main event here today is going to be Fed Chairman Jerome Powell, his economic outlook. So the S&P 500 flat on the session, 6750. Many of the analysts out there have been calling for higher S&P prices, not only year-end targets going up, we're also looking at 6-month and 12-month targets, all increasing on up here. We could realistically see 7,000 by year-end, in my opinion, on the S&P 500. You have the NASDAQ flat sitting at 25,000. You've got the Dow up about 50 here. The Russell just slightly higher. Volatility index just slightly lower. Something I've been monitoring is 10-year Treasury yields pushing on up after that Fed cut, up to 4.13%. What we're seeing is the short end of the curve has been anchored and the long end continues to steepen upwards here, acting as a tailwind here for many of the risk assets out there. You look at Bitcoin snapping back after yesterday's $2,500 sell-off, the dollar index breaking this 97 level, and many of the foreign currencies pushing on up. We're seeing a bit of pressure on the agricultural products, with soybeans being one of your weakest here, with no real deal, with soybean farmers just left in limbo here because of the fact that there was no deal brokered with China, and China has record purchases going on from Brazil and nothing here but the U.S. farmer just holding the bag. So we start to look at some other things coming out here. Look at the global markets. We've got European trading. Those stocks rose here, led by retail stocks, automakers, while drug makers lagged here. So it's also in the Asian companies, Asian trading. Asian stocks, they struggled for direction here, but the rally in semiconductors really offset the losses in China and Hong Kong. The MSCI index excluding Japan, was little change here after rising about 0.4%. So the Japanese markets are closed for a holiday. As far as earnings are concerned, we'll have Micron after the bell. Micron is one of the holdings that's pushed its way into our top 10 holdings here on our wealth management side, Blue Line Capital. We'll be looking at trimming some of that position here as we get closer to the closing bell here because of the fact that Micron tends to trade like a commodity here and has been quite volatile here recently. Now we do see some tailwinds for Micron going into the futures, especially with all this AI demand, but it's prudent to always practice risk management here. As far as economic data, we're going to have PMI data for September due out, followed by the Richmond Fed Manufacturing Index at 10 a.m. We'll also see the CME's Fed Watch tool because we want to really take into account here what are the markets thinking about these future interest rate cuts. We will have Powell speaking here a little bit later today, but you look at the CME's Fed Watch tool, you got an 89.8% chance of a 25 basis point interest rate cut, a 10.2% chance of no change. You go into the poly markets show an 83% of a 25 basis point cut, 4% chance of a 50 basis point cut, and 14% chance of no change. Again, at 11:35 Central Time, you're going to see Fed Chairman Jerome Powell speak on the economic outlook. We will have PCE data coming out on Friday. That's the other big headline. And then oil declining for 5 straight days here, snapping back a bit just under about 1%, but oil really the reasoning between the sell-off here, or because of the sell-off and the range that we've been in between $60 and $65, it appears that as we get closer to that $65, you see a lot of pressure come into play here, a lot of discussion about flooding this market here, increasing supplies here, and really trying to shut off profitability here from Russia as far as their exports are concerned, and really trying to flood the market. So we're seeing Iraq, they may shortly resume some of their exports here, and the global benchmark here for Brent, it fell towards $66 a barrel. It's been slipping about 2.8% over the past 4 sessions here. And again, WTI just bouncing off that 62 level. If you look at the ETF flows, we're seeing buys in gold, silver, palladium. We're seeing a bit of sells in platinum here. So the exchange traded funds, they added about 280,000 troy ounces of gold holdings in the previous trading session here, 3rd straight day of growth. In total, gold held by ETFs rose about 15% this year, taking it on up to about 96.1 million ounces, the highest level since October 18th of 2022. What you want to look at when you look at the ETF flows, you look at the chart too, and you can see that gold, silver, things like that, the ETF flows, we're not even close to where those 2021 record highs are at. So that's where I would anticipate that prices look like they're going, and that's where the ETF flows look like they're going here. So the ETFs, they added about 1.17 million troy ounces of silver holdings, and that percentage is up 13% year to date. Gold silver ratio dropping to about 85 to 1 here, and I do anticipate once the afterburns are put on this silver market, we should see a move on out down to about 80 to 1. So if you guys got any questions, you want to open up futures trading account with us, give us a call here or shoot an email at info@bluelinefutures.com. And remember, futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.